Do you know that the year 2023 can take you a lot closer to that ultimate goal of financial freedom? Yes, that is right. 2023 might be the year of recession, but not for a financially savvy person like you. I know that's interesting. I have much more to tell. Just stay with me until the end of this video without skipping it, and you will learn how. Saving money is important, but the investment is even more crucial to achieving financial freedom. The thing is, 2023 is going to be financially hard for people who do not bring into use the right strategies for making money. While inflation is cooling, projections still point to elevated consumer prices next year. What's more, recession threats remain high. Unemployment may rise and investors are still reeling from stock and bond indexes, falling double digits for the year. So experts say a strategic approach with your hard-earned dollar is critical. But what is the strategic approach? Well, in simple words, this approach is not only to make a profit in 2023, but to make an immense profit. You might already know that recession is a golden opportunity to make wealth. Well, how? Lucky for you, I have come up with a list of 5 lucrative business investments that you must put your money into. Number 1. Index funds. Index funds have historically worked really well, even when other investment ventures appear to be too risky. And the good thing is that it is really simple. So basically, an index fund is a big basket of stocks you could buy into for one low price instantaneously. So this way, you could have a little bit of everything without having to buy each of them individually at their full price. For example, if you want to buy one share of every company in the SP 500, it would approximately cost you a staggering amount of more than $110,000. Or you could buy something like SPY, which for $477 tracks them all at a price that is not a literal house. The advantage of doing so is that you can get the diversification of owning 500 different companies, and this single investment is shown to outperform 95% of actively managed funds. Well, that means if all you do is make a single investment at the beginning of January every year, you are probably making a lot more money than your friends. If someone tells you that we are trading at an all-time high and now is a bad time to invest, tell them to do their homework on the matter. The reality is that studies show that since 1950, the market has hit an all-time high on 7.5% of all trading days. Even more convincing is that since 1998, the market paid higher returns for investing at an all-time high versus just on a random day. I know nothing can be stated about the market with surety, but if history is any indication, you are better off investing immediately and then counting your profits at the end of the year. Number 2. Invest in real estate stocks and real estate investment trusts, REITs. Right now, the easiest and most accessible way to multiply your wealth is by investing in real estate stocks. Brokerage firms, real estate tech companies, and real estate investment trusts, REITs, have been feeling tremendous pressure in the markets, thanks to rising interest rates and a slowing economy. As a result, the past year has witnessed real estate stocks and popular REITs losing upward of 20% to 40% of their value. So an economically savvy person like you would know that right now is a tremendous opportunity to buy and make loads of profits. You should know that during the coronavirus pandemic crash in the spring of 2020, many REITs lost 50% or more of their value. In the year that followed, these stocks rebounded notably after showing their resilience and strength despite wavering investor sentiment. I believe many of the REITs that are down in the double digits today will see huge comebacks in 2023 and beyond as the market gains a more optimistic outlook. Investing in real estate stocks and REITs are a proven way to multiply your money, but it takes time. What I suggest is that investors should buy assets for the long term using today's market conditions to their advantage. Those who invested in real estate in 2007, when real estate prices just began decelerating and the market fell into a deep bear market, would still be up 47% and 62% roughly if they held those assets today. Lock in 2023's low prices and hold for the long term. Well, that will surely increase your opportunities for multiplying your money. Number 3. Stocks. You might wonder why not just invest in index funds and do nothing for the rest of the year. Well, that does not stop all of you from placing your bets and seeing if you could do better. And if you pick the right ones, well then, you could end up making a lot of money. With the right selection, you could make a decent sum of money by the end of the year. But the thing is, you already know that the higher the return, the higher the risk associated. If you pick wrong, you could wind up losing a lot. With wrong choices, it becomes pretty easy to lose a significant sum of your investment once you buy a dip and it keeps dipping. In that case, I would recommend that if you are going to take a chance with individual companies, choose the ones that are most likely to give you loads of profits. But invest cautiously. For instance, do not invest everything in one go. Ideally, you should only allocate a small part of your portfolio to more speculative investments, and that is it. This way, if they are not doing well, you are not risking everything. But if they do well, then you are boosting your return without getting carried away. Number 4, Roth IRA. An important thing that people mostly forget about is that when you make a lot of money in the market, you are also going to have to pay taxes, sometimes maybe up to 50%. To avoid that, you should first be investing in Roth IRA. In case you do not know what Roth IRA is, let me give you a brief background. Roth IRA is basically a retirement account that allows you to contribute up to $6,000 a year in after-tax money, and then all the profit you make in that account is completely tax-free by the age of 59 and a half. Let's take an example of how this account works. Let's say you max out a Roth IRA at $6,000 beginning at the age of 20, and all you do is invest in an index fund that makes you 7% annual. At this rate, by the age of 60, you will have $1,371,000 completely tax-free. If you had done this in any other account, you would have been taxed on that $1,371,000 of profit. Even at a 15% long-term capital gains tax rate, that is still $169,000 gone to taxes. Just think of all the things that you could buy with this money. Let's be honest. Chances are that taxes will only increase in the coming decades, so it is time to open this account and save as much money as possible. Number 5, cryptocurrency. Even though you might have heard stories of people becoming millionaires through investments in cryptocurrency, the truth is that studies show that you do not need to go all in with a lottery ticket-like hope of making millions of dollars to do well. The truth is that investments in cryptocurrency should work on science. The research shows that you do not have to invest a lot of money to make a big difference. In fact, studies show that only a 5% allocation to Bitcoin would have boosted the cumulative return of a traditional portfolio by 65% since 2014. Likewise, a New York global investment firm even found that their best-performing portfolio only contained 3% Bitcoin, and that boosted the value of their account by 50%. So I would recommend you just stick with the top 10 cryptocurrencies by market and then do absolutely nothing. Also, history shows that from these top 10 performing cryptocurrencies, the majority of the returns come from Bitcoin and Ethereum. All you need to do is just to invest and watch your profits multiplied over time. So that was all from today's video. Proceed to this video about the success story of a person who reached the milestone of $1 million through investment. Thank you,